One of the constant regular topics in real estate news is the housing affordability crisis. You hear this all the time about what percentage of people can't afford property or can a property. Is there a crisis? Is there really a problem? Is it something we're going to take a look at? And why do we constantly hear about it? Well, I'm Bill Gross. This is my regular weekly real estate news update. And before we get into the details of the affordability, let's take a look at the market where it is today. I would say there's two things that are critical in the real estate market to determine prices. One is supply or inventory, supply and demand. And that's going to determine where the prices are going up or down based on the balance of buyers and sellers. And so if you take a look at inventory, we're going to find today the inventory continues to be at historic low levels by any way that you slice it. Let's take a look at the inventory nationally, and you'll see here we are in 2023 already. Inventory levels almost the exact same as 2021. Slightly higher than 2022 than last year, but well below all other years in recorded history. So we have less homes available. Obviously, our population is higher than all but the peak of the pandemic period. And as long as that's the case, housing prices could only go down so much because the sellers have just determined not to sell, and buyers to get more properties have to bid up prices or keep the prices steady when otherwise they would go down. Another very interesting factor is the off-market properties. Off-market would be properties that are not published in the MLS or to the standard retail market, yet are still being sold. And one of the fascinating statistics I've been watching all along is the off-market percentage, you can see here in 2023, is higher than all the other years I've recorded. And what that tells us is that the market is inefficient, that the normal way of buying and selling on the MLS is not satisfying all buyers and sellers, and they're having to go off market in order to close more transactions than ever. Still a small percentage of the total sales, but by historic standards, a high number. And that has the implications of at least telling us that the market overall is inefficient or not satisfying buyers and sellers in the current market condition. Now that's nationally. What's it like locally? Let's take a look, before we go through let's take a look at how quickly homes are selling, because even still by that measure, we can see that in 2023, homes are selling over 40% of the time in less than 2 weeks of being listed. Now, that's not as tight as the last two pandemic years, but it's still tighter than all other years in recorded history, including the first year of the pandemic. So we're seeing that homes sell very quickly now in the markets even still. And those are national statistics. Local statistics show the same story. Here we have inventory levels now at below all levels ever recorded in history, other than this one weird month in 2013. Not sure what that was all about. But you can see that's lower other than the pandemic period last year and a little bit the year before and before that. But for the last 10 years, this inventory would be a record low. Even the highs last year would be a record low for the non-pandemic era. So inventory here in the Los Angeles area is still low. If you look at the market conditions, Altos Research shows the Los Angeles market as 39, still a seller's market. This would be the standard 30 would be a buyer's market, still a seller's market. If you look at the price per square foot, still slightly increasing, meaning each average square foot of home is worth a little more than it was a year ago and seems to be going up. So overall, we see inventory going up significantly. Inventory staying the course consistently, which is what is stopping home prices from dropping. Now, one of the key factors that has been more volatile lately is mortgage rates. And we're going to take a look at those. You'll see there's been some excitement here in the last couple of weeks because rates had peaked out last year at 7.37, and it dropped down as recently on a few weeks ago, February 2nd, 2 weeks ago, down to 5.99, just under 6, and then pop right back up again to about 6.4, 6.5, where they're closed now. So you can see that over the last few months, it stayed in this bandwidth. The key thing is rates aren't rising, they rose, and they've been this bandwidth. Surely if they rise above 7%, start heading ing up, that would be a troubling concern. But they've been bouncing around in this area for a while now, which means rates did increase from their pandemic lows, but are still low by standards of the last 20, 30 years. So what does all this mean? It means that right now the market is historically pretty solid by all indications in terms of inventory and prices and where the mortgage rates are. There's an interesting a report that came out. Goldman Sachs is projecting a 6% drop from peak to trough. Now, what does that mean? It sounds ominous. Well, if you look at it on a graph, and they have one with the company, you can see that they're saying that from the peak last summer, prices will drop a total of 6%. But take a look at where that falls out historically, right? That means prices are still higher than any time before the pandemic or any time before then. So we still have consistently increasing housing prices, and even a 6% peak drop from the peak drop, according to Goldman Sachs, would still be at most a correction of where prices are, getting back some of the excessive values of the pandemic period, but certainly would not be a housing crisis or falling market. So real estate news, if you follow me, is I think worse than political news or the regular general news. And this week's Booby Prize or Raspberry goes to MarketWatch. MarketWatch is this week's reporter on home prices have a long way to fall before housing is affordable again. I always think it's interesting. Number one, housing is affordable again. It's an interesting concept we're going to talk about. But housing prices have a long way to fall. What that means is, I think it's always when you say it that way, why would you say they have to fall? You might say, we're not there yet. Maybe we're heading that direction, maybe we're not. But to say we have a long way to fall tells me they're always trying to paint a negative picture because that's what generates clicks on their website. Before housing is affordable again, what does housing affordable again mean? They want to say that buyers have to negotiate, fully leverage the negotiating power. I'm not sure what that means. Last year, only 4 million people have bought houses, maybe down from 5 million a few years ago. Still, is that not affordable? Well, it's affordable to the 4 million that sold the property. It's affordable to the 4 million people that bought those properties. It's affordable to maybe the other million that bid on houses and got overbid slightly. It's affordable. They just weren't aggressive, or in some cases weren't prepared, didn't have the right agent, didn't have their paperwork together. So it's an interesting idea to say that housing isn't affordable. Now, what you could do, obviously, if you want to make it so more people can afford houses, what's the obvious answer? Well, we could build more houses, right? But we don't have that discussion. We don't have an honest debate on should we or do we want to build more houses? More houses would mean taking up more land. And in California, we don't want to do that. We've restricted where building can happen. Building more houses would mean using more water. And in some states, that's become a big political issue as well. Obviously, more houses is more greenhouse gases and CO2 and all that goes along with that. But we're not debating that in the context of housing affordability, and the importance of people having housing. We're just saying it's not affordable, while at the same time, overall, restricting the building of new houses. So it's almost like we're forcing ourselves to be mad at the results of the policies that we don't even discuss or agree with. So to me, I just feel like this discussion is dishonest to say housing is or isn't affordable. It's affordable. That's just the price you have to pay if you want to buy it. As I tell people who are in the market all the time, they'll call me up and say they want to buy a property and you scout it out and the house they want to pay is $1 million, but the house they want to buy is being sold for $1.2 million. I tell them that's the equivalent of wishing to buy $20 bills for $18. You really can't do that. If you want to buy a house at retail today, you have to buy a $20 bill and pay $20 plus closing costs. And you hope in the long run, the house goes up in value, you get some tax deductions, you get some deferral of the profits, and there's other advantages to owning houses, like you own the house and enjoy it. But you typically can't find a house today that's worth $20 and buy it for $18. Similarly, to say housing isn't affordable is a complete lack of understanding of the marketplace. Houses are affordable. The number of people choosing them is based on the price of the house. And the price is determined by the supply. If we really want to make housing more affordable, the obvious answer is to build more houses. Not saying we should, not saying we shouldn't. I'm just saying let's have an honest debate and let's not have MarketWatch and similar companies write what I think are dishonest and misleading articles. What do you think? Well, either way, the best decision for you is what the best decision for you is. If it's time for you to sell the property, get in the market and get it sold. I have a friend who's on the market today who really meant to put in the market months ago. And unfortunately, the market softened in the time period. It probably cost him significantly. When it's the time for you to sell, sell the property. When it's time for you to buy a property, buy a property. Don't get caught up in speculating where the market is or going. Make the best decision for you right now. And if I can help you, let me know. Call, text, or email me. I'm Bill Gross. And as always, make today your best day ever. Thanks so much.